All right, hope everyone's doing well. So, still continuing with trying to make, uh, 10-minute, 15-minute videos. Looking like most videos are going to be closer to the 15-minute side, but they're going to be a lot more frequent and shorter than prior videos that were anywhere from 40 minutes long to 30 minutes long. I will occasionally make a few videos, probably if I'm discussing a topic, maybe more in depth, but I'm going to start splitting more videos up into pieces if I do that. So anyways, going through some days, looking at some charts, and figured I'd just kind of share my thoughts aloud. Again, I say it in many videos, it's great practice to just look back on charts, look back at different days, and just kind of go through them. And that's what I'm doing now. So this is Goldman Sachs. Here's Halloween, 10/31. And I don't really know what happened to the left, but either way, if I see bear bar and consecutive bear bars, typically on the open, if you see consecutive bear bars, especially if they're big, like these two, let me do it like this. It's typically always in short. And, but first, take into context the prior day. So over here, you're thinking, okay, leg in a trading range. So we may have a failed breakout below here. Now, the one problem with buying the low is you have to be prepared that we may have to fall below the low and have a failed breakout. Either way, try to keep trading simple. By the close of bar 1, it's always in long. It's similar to this. Even though this is bad follow through, bar 2 and 3, this bar is so big that the odds are you'll get a second leg. So over here, consecutive bear bars, always in long. First reversal will fail. Even though you're selling at the bottom of a trading range, it's pretty strong. So it's probably going to lead to a little bit more down. And then you have a doji. So what does a doji signify? Well, two things. Number one, bulls bought this low, scaled in, are trapped. They tried to get out, so that's +1 for the bears. That's a good thing. It means there's potentially trapped bulls who could give up down here. Number two, it's not a bull bar, so it's not a strong bull bar closing on its high indicating a failed breakout like this. This would have been a problem. This bull bar would have been a problem over here, which led to more down. It's also a 15-minute chart. It's a strong bar from high to close on the 15-minute chart, probably going lower. Then we have another big bear bar and bad follow through. So is this a failed breakout? It might be. The problem you have is all these bear bars. You have to ask yourself, what's more likely? Are we going to trade all the way up to the high, or are we going to test lower? Well, the obvious answer is we're going to probably try to get here before we get here. Now, this is an indication, though. This is a warning that we may not go much lower, but we're probably going to at least go a little bit lower. I wouldn't buy it. If anything, it's kind of let me put it like this. It's a tricky buy, because if you do buy, you may have to use a stop somewhere down here and scale in. And I don't even know if this is a wide enough stop. So you're far better off selling or looking for a second entry. And you can see right here, not as many bulls willing to even buy the low. But again, I think bulls will make money that buy here and scale in. But this is kind of the point. The bears needed they needed three sell climaxes. The bulls wanted 3 pushes down. And now we have micro double bottom, down, up, down, up. So it's a more credible buy. Is this the low of the day? It might be. It's an okay buy, but it's probably better to wait for consecutive bull bars. This is probably minor. 3 consecutive bull bars, getting close to always in long. It might be always in long, might need one more bar. Okay, probably always in long, and put a stop below here. And you can see we're just kind of channeling up. And, now double top, bear flag, but consecutive sell climaxes, obvious target here, obvious target here. The first reversal down is probably minor. The first reversal up is minor. Tight enough channel, first reversal down is minor. So I'm not sure if we have to test down to here before we get up to here, but I do think we will get up there. And you can see what happened. We had to test, have a fairly deep pullback before we had the rally. So bear trend line break, major trend reversal. And you can see what's happening. We're trying to get to this high and kind of struggling. But you can see, look over here. Look how close we've gotten to the low close. Now, granted, this low close isn't a great play. It's not a great sell to close bar. I mean, typically, I try to, yes, this is the low close, but you want to look for bars that are very obvious bars. Over here, what's a very obvious sell to close bar? It's not this. You don't want to sell. Do you really want to sell this far away from the moving average after this bear breakout? We had bad follow through. This bear breakout went sideways. This is the best looking bear bar. Do you really think many traders are going to sell it? No, they're not. Most traders are going to buy it, if anything. They'll buy the close. They'll buy back shorts. They're going to wait for a pullback. So I really see this as a more credible sell to close. And the more credible the entry, the more likely you'll be able to get out at the original entry. So traders, a lot of traders, let me just give a perspective like this. Look how many times we touch this low close. Here. It's a warning that, it's letting you out of break even. Now, I said this was a major trend reversal. It's probably more minor. It is a major trend reversal, but 40% lead to trading ranges, which is a minor move. And eventually you can see what happened at the end of the day, which fascinates me. I want to say Apple did this. It fascinates me how it's computers. Last bar of the day, we just rally up to this obvious target. Apple just rallied up. I don't know if I mentioned this, but again, this is what most small pullback bull trends look like. They rally and go sideways for several hours and rally again. But on a daily chart, who cares? It's a pretty strong bull trend day. So we'll see what happens here. Would I buy Apple right here? Of course not. If I'm looking at this chart, I'm thinking, here's the bottom of a channel. So where's the top of a channel? Maybe it's something like that. Who knows? Now, if it's this, I'm nervous because, hey, we're right. Is this a sell vacuum? And another point, we haven't touched the moving average in quite a few bars. I don't know how many bars this is. Is it? Let's see here. Kind of forgetting how I'm doing this. There we go. It's 20 bars. So 20 bars without touching the moving average is climactic behavior. Best looking bull bar. If anything, I think it's probably, I would probably sell out of, I would definitely sell out of longs if I happen to be long right here. Would I short? You could, but it's kind of a tricky. It's a tricky sell. We're going to fall every rally since from here to here. We've gone below the moving average. So we didn't get below it here. We're probably going to go below it here. So maybe you sell the close, put your stop up here, and interestingly enough, 2 times your risk is above the moving average. Now, the interesting thing about that is, are we going to, that's assuming we open here, which I don't think we will. I think we're going to, either we may gap down. We could possibly gap up and find an early reversal. If we did gap up, I would certainly look for an early high of the day. I think either way, you'll get an early high of the day tomorrow. And if you don't get a strong bear bar, which I think is less likely, I think you will get something like this, a pause bar and then a sell-off. We had a new high of the day over here, paused, sold off. Amazon, kind of an interesting market to look at. The other day we gapped down like 6% overnight, and of course in one day rallied quite a bit. But, look right here, you're thinking, wow, what a big bull bar. Surely this means we're going to rally all the way up to here, and we might. It's 3 pushes down, 1, 2, 3, truncated wedge, we couldn't fall below here. But the problem is, it's within a trading range. There's not a lot of conviction over here. So I think we will. We did get a second leg up. We're rallying, but we're also losing energy. So I don't know. Let's see here. Netflix. I'm just kind of looking at random markets. It's fun to do. So bear trend hadn't touched the moving average in quite a while. We finally did. Exhaustion, strongest bear breakout in the move. Odds are it was going to fail, which it did. And pretty much trading range. Now, I love to look at a few 5 minute. Most of the people looking at this would rather see 5-minute charts. Here's a Facebook yesterday, November. Typically here, let me just add a session break. Because I can see the session break, but I know it's probably more difficult for others to see it. So here is the open. And you can see, well, actually, no, not a fan of the session break. Here's the open, this bar right here. I don't like it because it's hard to sometimes see a tail. And it reminds me, you want to treat the chart as a continuous chart. It does not matter whether you're looking at the overnight session or the day session. It's all one thing. So for me, what's most important, this bar, and we're trying to break out above the bars to the left. I don't care if there was a 12-hour, I don't care if there was 12 hours in between this bar and this bar, whatever the time period was. I don't care. I know it's not actually 12 hours, it's longer than that, but who cares? Big tail on top, probably going to fail, so probably sellers above. We found sellers. Now we have a second entry buy, and it's probably an okay buy. 3 consecutive bull bars, buy for your stop down here, but you have to be aware it's not a great buy. It's actually kind of hard to see. I don't want to do that. And you start seeing this tail, and you start seeing this tail, and you have to get suspicious. Okay, this may fail. So if you did buy, you can argue it's always in long. Not really a great case, other than the fact that it's a second entry buy. You can argue it's always in long, but when you start to get these bear bars, I just get out of shorts. The smart traders, or I think a lot of traders would just get out. They may buy and just get out, save a few points, make plus or minus a couple points. Then you get a bear bar, bad follow through, 3 consecutive bear bars. Are you always in short? And you might be, but 3, it's a wedge bottom, 3 pushes down. It's a large trading range. The most important thing, I don't draw it that often, but that doesn't mean I'm not thinking about it. That's a little ugly. We got to fix that. This shows you how often I actually draw a box. Let me see if I can kind of make this green a little bit. Whoops. I just kind of forget how to do this sometimes. There we go. That'll work. So again, this is what I'm thinking about. Big trading range. So we had 3 consecutive bear bars, low in the range. Is it always in short? Who knows? The odds are we've seen the high or low of the day, 50% chance at least. We're getting close to 10 o'clock, 18 bar range. So, and what the 18 bar range, all it means is, what that means is when you get a breakout, by the time you form the range, the opening range, which is from here to here. So it's really, let me just draw that back. I'm afraid I didn't save that. Some kind of a pain. By the time you get this range, yeah. Let me just do this real quick. So that way in the future, I just want regular green. You know what, here. That way in the future, we'll not have to do this every time. There we go. Make it like a little less transparent, set as default. There we go. That way, so we have a breakout. We have an 18 bar range. Here is the true 18 bar range. It's going to be, I don't know, basically it's basically this range. From this, here it is. So at some point, you're going to get a breakout. Whenever you get a breakout, if it does not reverse rather quickly, here we're breaking out below here. If it doesn't reverse up on the next 1 or 2 bars, then it's probably going to lead to the high of the day. Here we had a breakout, here we had a bigger breakout, probably going to lead to the high of the day. But that does not mean we will not have a very strong rally back into the range. The 18 bar thing is really, it's helpful so you don't think, we failed to break out down here, we have to go up here. Context is everything. Very tight trading range. We've been going sideways for an hour and a half. The odds are we're going to have a breakout that doesn't last very long and go sideways again. It's kind of like trading ranges. You have a trading range, you bear breakout trading range, and you meet in the middle. The odds are extremely high you're going to go back in the range. A lot of traders, institutions especially, they're just going to say, hey, it's a trading range. I'm gonna buy down here. I'm gonna sell up here. And if we get a breakout, who cares? I'll just keep buying on the way down. Or I'll say, here's a measure move down. I'll buy here, and I'm gonna wait for a stop entry. And then maybe they just say, wow, a lot of bars down. I'll just buy somewhere down here, betting that we'll get up to here. So a way to manage that. And I'm not suggesting people do this. I think it's quite difficult to do. And always in is probably easier for most people listening. But you buy this low, you buy more lower, you put a stop down here. Factor in the risk though, it's quite a bit. Either way, it's always in short, get in short. But when you see this big bear bar sideways, and you start to see these dojis, you have to be thinking, hey, this might be a failed breakout of an even larger trading range. And then you start to get, the bears sell here and they get trapped, and we get a bull breakout. And then, they're trying to form a gap here, which they did form a gap. So I would not be selling in here. There's a decent chance, the risk is real. You're going to get this. Whoops, wrong button there. So this is going to be a longer video, but breakout follow through, probably going a little bit higher. Starting to go sideways. We're back in this range. And it's fascinating. Look what happened there. So bear break, we had a bear flag. We got the bull breakout, strong breakout, follow through. We tried to close the gap several times. 3 pushes down, 1, 2, 3, and we failed. I'm trying to think of like a random stock that I never look at. Oh, here's one. Nvidia. No, I'll try BAB. I think it's Alibaba. It's a popular one. And again, it's just kind of fun. I just look at random stuff. Like I'll look at that in a second. But PG&E. Or maybe it's PCG. Here we go. This is the electric company for California. They're obviously in a lot of hot water ever since the wildfires. And I think there's that. If you think back to 2000 and I want to say 17, there was this crazy wildfire in California, and it led to this. And it fascinates me. This is the monthly chart. And this is my one. If somebody was to tell me that price action cannot predict the future, which obviously it cannot predict the future, it's just a reflection of what all the institutions, it's just an agreed upon, it's just the majority vote. I mean, that's all price action is. It's the vast majority agreeing, based upon their decisions of what's going on. So, people say that, a stock, all it is, it's just a footprint. It's a footprint of where are all the dollars that are invested in this company going, whether they're invested several times over or they're getting out and getting in, it doesn't matter. You cannot hide, sure, fundamentals always drive a market. They have to. Obviously, if Apple starts losing money every year and doesn't make any money and they stop selling anything, they're going to go bankrupt very quickly. Everybody gets the same thing with Amazon. And obviously there's other factors. I mean, the reality is the risk isn't the same. It's not like, it's much more difficult for a company, like I'll put it like right here. Hypothetically speaking, if this was a strong company, a bear breakout, let's just, I know it doesn't work, but let's just pretend, the odds are a 60% chance you'll get a second leg. Well, that's kind of a tricky situation in general because it would lead to zero. And if the company's probably not going bankrupt, then you have to be thinking it's probably not going to go to zero. Oil. Last thing I'll say, then I want to talk about this company for a second. Oil is a good example of that. The monthly chart of oil is at 40, here's the monthly chart. And It's a spike and then another breakout. So it's basically a trending trading range. We had a breakout, sideways mini bars, another breakout. We're probably going to go back in here. And I say that because we had a trading range for many, many years. We broke below that range, and here's the bottom of the trading range. We came very close to it. It's a reasonable thing, and I think we're going to go back up to here, and ultimately I think we'll go back to here. One of the reasons I think that is because this, if I snap this perfectly, takes you to $1.57. Do you really think crude oil that we use every day in our lives is going to go to $1.57? Now, this is the futures contract. I get it. But I just don't think that's likely. So it's kind of like, for me, it doesn't make a lot of sense to sell, put a stop up here, betting on a measure move down, because it's just probably not going much lower. Now, it could go, it could go significantly lower. It could go to $20. But either way, traders are going to say, wow, I get to buy oil at $20, and I think it's eventually going to go back up to here. What a deal. But let's go back to PCG for a minute, the electrical company in California. So the wildfires happened over here, and we have a bear breakout. When I look at this, I say, wow, strong bear breakout. First up's minor. I'm going to look to sell, or I'm going to stay short. Okay, going sideways. So, maybe the bulls, aggressive bulls buy, or they buy here, but then they got to get out. Second entry short. And strong bear breakout. And this is when that whole, I guess it was last year, we had a really bad wildfire again, and that's what happened. So, enough of that. Trying to think what company. Oh yeah, Alibaba. Well, I'm going to save that. I'm going to make I'll make a second video after this, and I'll talk about other stocks. And I'll really talk more about Always In. Thanks for watching.